What's up, everybody? Good morning. All right. Let's see. I think I want to try to get these a little more scheduled so we're not bouncing all over the place as we go through them. So, what I'm going to do is I'm going to run through the memes, the Mag 7. I'll do active trades, like things from Pickle's picks last week that are still kind of in play. And then I'll take some questions up until we start macro SPX when JFresh hops on. Dork won't be making it today. He's gonna be a little bit busy. So I think let's try to get through all of this as fast as possible, in the hopes that one day these streams will be 2 hours long and not 5. Well, you see, Dork has a chair. How's CPI looking? Like based on, are you talking about the adjustments from Friday? We don't have CPI, like a CPI print until Tuesday. I like the long form discussions with Doric and the cat. I do too. I mean, um, but they should probably be a little less long form. Just general, no change, soft landing. I mean, nobody's really said soft landing since, well, yeah, I mean, since the FOMC meeting in Jan when the soft landing disappeared, but no one cared. I don't think we're headed for any kind of soft landing. If there is a soft landing, we're in it right now, right? And that it's not really a landing. It's more like refueling before we get fucked. But historically, soft landings beget hard landings. They tend to just be a way to kick the can. Um, there's actually a pretty good chart that was circulating around for a while. I'll have to dig it up, but most of the Fed's soft landings historically have just culminated in a big like market rally that crashed. Um, and I don't see any reason for the Fed to cut rates anytime soon. I mean, labor is still very strong. So I think the hopes that they'll cut rates are a little bit misplaced, or at least cut rates aggressively, unless there is a crash. What happened to Palantir? It jumped almost 50% in the past 5 days. How high can it go? It's probably about topped out. It's already trading several dollars in excess of Gamma Max, so I don't think it's gonna stay up here much longer. But they beat earnings, I think, for the fourth quarter in the row with positive EPS, which is a plus for them. They still don't make a lot of money, but they're making enough. Good morning, SH. Anyway, so yeah, let's start off with the plan before I get too distracted by questions. So we'll start with GME. some of you know, GME had a little bit of bounce over the last 3 days through the highest concentration of its ETF FTDs. We discussed last week that it could have some bounce, especially if small and mid cap indexes kind of favored this. Russell performed pretty well into the back half of the week, both the Russell 2000 and Russell 1000. GME is part of the Russell 1000. So that helped to pressure the ETF FTD covering a little bit. We did indeed see some covering in both of the largest ETFs on GME and on GME itself. However, the run was kind of muted. I think after Friday, there's really not a lot of ETFs or FTDs left. So that's probably about it. Peak to trough, this was about 14%. There was probably a little bit of money to be made there. I just sold covered calls against it. I don't think this is going to lead to anything. I think we have several more periods of volatility shorting before we get any kind of significant run. Maybe we'll see some interest around earnings. I think that's probably a possibility if GME can achieve profitability due to the cuts that they've been making. It sure as shit not going to be due to revenues increasing. So that's kind of where I would look out for the next bigger move, but I would say this is probably run its course for now. So not bad, but not great. Upstart is the next one. So I think Affirm missed pretty hard on their earnings. That didn't really help Upstart out much, but Nvidia's continued to trend, and that puts a lot of pressure on bots. I think if Nvidia pulls back to those kind of big short vol levels at 700, 675, then that may free up enough liquidity that we start to see vol shorts come back in on Upstart. I think right now it's probably not going to go up much more, but we can keep an eye out for more covering. I would say that the best approach right now here is probably either covered calls or call spreads slightly out of the money, maybe above delta neutral, which is, I believe, pretty close to the price we're trading at right now. Going short right now might be a little bit too aggressive, but I think there's probably some call spread opportunities going into OPEX. Yeah, we're still just a bit above delta neutral. Delta neutral at 29.88, but charm is negative, so probably flat to a little bit down, but not bearish until it gets under $32. So still a little bit of range there till it hits anything remotely bearish. But total dealer exposure has been falling off. Charm is negative. Puts have been increasing pretty steadily over the last, well, very much so over the last week, but over the last 3 weeks, we've seen a pretty big increase in puts and a big drop off in call interest. Gamma's still a little positive, so price might bounce around a little bit, but I think ultimately that's turning negative as well. So yeah, short confirmation down below 32. And then, probably not a bad opportunity to sell vol on this. What's next? Fubo. So I didn't really get a chance to talk about this during the week too much. I don't really see the Disney collaboration with Disney, Fox, ESPN, and Warner to be a huge threat to Fubo. First of all, it doesn't exist yet. It's just right now it's just a product that may or may not come to pass. Historically, Disney's partnerships with Warner have been blocked due to antitrust issues. And I'm sure the FTC or DOJ would probably step in again here. But I agree. It seems ridiculous to consider the impact at this point. And I would say that people who own Fubo and institutions that own Fubo feel similarly. Really, all we saw was a lot of shorting. We didn't see much Fubo actually sell off. It got a little bit more liquid, but not substantially more liquid than it was, right? Um, During the drop. So a few people got scared out or shaken out, but really like no long-term effect. It's not like we saw everybody dump their shares or anything. And Fubo pretty quickly bounced back to the $2 range. Something I actually think, and maybe this doesn't matter because I don't, my Fubo position's basically paid for through covered calls at this point, so I don't have a lot of skin in this, but I think M&A, like from an M&A standpoint, this makes Fubo far more attractive. They already have a lot of broadcasting licenses in place. They have the software built to stream multiple sporting events at the same time. Um, and if a buyer were interested, they also fully developed an integrated betting system to go along with that live streaming. And I think simply the broadcasting rights and the software are probably more than enough to make them really attractive to anybody who's going to want to step up and compete with Disney and Warner um, in the sports broadcasting space. Additionally, their Latino market penetration and international market penetration are better than any other sports streamer by a long shot because of the number of broadcasting rights they have in football or soccer. Um, and so I think this makes them a really attractive acquisition. If it doesn't, it still gives them a space to compete against Disney, where I don't think Disney's really targeting. And as far as the major um, like sports leagues go, I don't think anybody's going to give out sole broadcasting rights to anybody, right? So, Fubo will remain a choice. They've also spent a lot of the last year targeting pricing models that could be ad supported, and they're going to be, or should be, far ahead of Disney on providing that to customers and providing a cheaper alternative over the next year and a half. So I think that looks good. From a liquidity standpoint, obviously a little bit of a sell-off unlocked some liquidity here. Fubo's probably pretty far away from doing any kind of volatility squeeze or anything like that. Short vol has mostly stayed away from Fubo since its last earnings, largely because they have been meeting those goals and meeting those quarter over quarter expectations as they move to positive EBIT by the end of next year. So I don't think it looks too squeezy, but I think they're still very much on track to hit their targets, and if they do, the value of the stock probably needs to be revalued. So yeah, I don't think too big of a deal on that. I know a lot of people were freaking out, so I'll try to allay those fears. I mean, obviously, it does represent some competition in the space, and yes, it could be very bad for Fubo in the long run. But I think until we see something more substantial manifest itself, then should be fine. Freaking out, that was incredible. I got to buy in. Yeah, fair enough. I mean, I got to close out a bunch of covered calls that I might not have otherwise been able to close, so that was neat. Is this a good entry for K? So I'm not gonna wait till I get through the memes in the Mag 7, and then I'll try to do this. Wait a second, are you telling me that shorters really only short tickers, which already have a weak portfolio in order to hedge their risk? Crime? Shockingly. We've actually seen a similar thing with GME over this quarter as it approaches a possibly profitable earnings, and that short vol has pulled back a bit, but still pretty aggressive on GME, more so than Fubo, probably because not a lot of faith that GME is gonna pull anything out of its hat. Top, we're still waiting on any news about what's going to go on with their earnings report. I think right now it's expected early March, about 20 days in advance of the NYSE delisting. They did retain accounting firm, so I'm sure they're going through all of their financials now, and we should have some news on that in the next like 3 weeks or so. Until then, not very interesting. Very illiquid, very heavily shorted. Probably the most heavily shorted it's been since no, almost ever. So yeah, it's definitely going to be make or break here for the shorts. Either they're right, and Fubo's going to come out with something that indicates that, or I'm sorry, Tup is going to come out with something that indicates they're moving towards bankruptcy, or they're going to have a plan to restructure, and if they do, the stock is probably grossly undervalued. What's next? Beyond's the last one here. Okay, so Beyond had a nice uptick in FTDs on Friday. I think 1.2 million, and simultaneously a very nice run in Russell that helped push it up into the end of the week. It wasn't anything excessive, but I think it was about a 15% run, 20% run to the peak. Still not on reg show. We could very easily see this covering up to this level lead to more shorting. I think below, I'm still looking below like $6 for entries. I almost just barely hit that the other day. I did average down some of my synthetic longs there, but nothing near the money yet. I'm still waiting on that. I still think I want to wait till this gets back on reg show before I pick up any longer dated call positions. But I don't think this blow off that we got on Friday is going to persist into a bigger run unless we continue to see Russell run. If we do, we may see this run up into OPEX. So it may still run a little higher, but it is out of FTDs as far as we're concerned. Those have fallen off. All right, any questions? Can you confirm that Fubo is for lovers? Yeah, Fubo partnership with AMC to support live stream events. Oh wait, I forgot AA doesn't actually give a shit about its investors. No, not at all. Hey Greg, I'm thinking of getting a position in gold or similar tickers. I feel like it's getting a tad oversold, and a small run up is in the cards. This is a TA play more than a macro play. So I don't know if you should really be using TA on Comex. It's a pretty heavily controlled environment. But as long as dollar stays strong, which it looks like it's going to for the next 3 months, and as long as foreign banks are interested in making that dollar stronger, which they currently are, then I don't think gold is going to perform very well. It may get a bump or a tick up, but it's probably going to underperform pretty greatly until there's some more currency risk at play. And I don't see that happening till like March, April, when we get like the BTFP decision, which is supposed to be closed, and April when we see the Bank of Japan possibly moving to a positive interest rate. I think a lot of the initial spike that we saw in gold and the all-time high that it hit about 2 months ago was central banks buying into gold in order to hedge some of those currency risks. So I don't think we're going to get another big move like that again. But yeah, keep that in mind. Pay attention to the dollar if you want to go long gold. Shorts haven't covered, obviously. Any insight into BTU also for the coming months? I mean, China's economy continues to underperform. We see this reflected a little bit in some of BTU's margins and their cash flows, but they actually did pretty well over this last quarter, all things considered. And you know, eventually, China will probably pick up the pieces of their economy and reassemble them into something functional. Until then, I would imagine BTU is going to stay pretty stagnant. I mean, it's stayed in this channel that it's currently in since June. I really just don't see it leaving. Very slow growth. Um, they still have a nice dividend yield. Uh, but yeah, nothing really going on with commodities. I would expect that the largest surge in interest that we could see in commodities will come simultaneously with underperformance in the Mag 7. I think if big funds pull money out of the Mag 7, they're probably going to target commodities because it probably means we're headed into a recession. And commodities are already priced like we're in a recession. They're very very low historically. So I think we could see a lot of money move around that time. Obviously, China's kind of the wild card there. We don't really know if their demand is going to pick up anytime soon, or when it is going to pick up, but it will eventually. They're still the world's second largest economy, and despite all their problems, their growth has been, or at least their reported growth has been strong. It's an election year, and U.S. oil reserves aren't topped off. I mean, we don't need to top them off right now. Biden really did sell the top when he opened up the strategic oil reserves back last year in response to the Russia-Ukraine conflict. But we have bought some more. We've been slowly filling them up recently. I agree that oil should be higher, and it's probably going to continue to move higher. We've had pretty much nonstop cuts out of OPEC until we achieved sort of a positive increase. And there's a ton of shorts on oil, so yeah, those are probably going to squeeze off. But it may still be a little while before oil moves more. I would say that any increase or escalation in the Middle East is probably the next thing that will spur a bigger move up in oil. But right now, the U.S. is producing a shitload of oil, most of it, and oh, actually, not just the Middle East. We may also see armed conflict in Guyana, between Venezuela and Guyana. So yeah, that could also spark an increase in fears around oil. But in the meantime, the U.S. is producing a ton of it. Oxy is a big proponent of that. The Permian Basin is pumping out oil like crazy. We're doing a very good job flooding the market with as much oil as we feasibly can, and that's kept oil prices mostly in check despite OPEC's cuts. Zom exiting Guyana. Okay. So, I mean, Oxy's, again, I'm going to say this, Oxy is being bought by Warren Buffett because Buffett can buy all of it. It is not because he's not buying it because it's the best value oil stock or the best exposure to a spike in crude prices. He's buying it because he can buy every last bit of the whole company, and completely absorb them, which is not an option for him with you know, companies like Zom or Chevron or Valero, right? Which he does own large shareholdings in as well. But that's why he's buying Oxy. I mean, I think Oxy's a good company. I think they have amazing Permian Basin exposure. I know they're looking towards another acquisition to further increase uh, their presence in the Permian Basin, and over the next 10 to 20 years, they're probably going to do very, very well extracting all that oil. But if you want straight up exposure to crude, they're probably not the best choice. What if he dies? I'm sure Berkshire Hathaway will continue to buy Oxy. I actually don't think Oxy's even Buffett's play. It's like his number two's decision. I forget the guy's name. No problem. All right, so on to the Mag 7. Apple kind of underperforming over the last week, still down 4%. We talked about last week how Apple looked kind of weak on its options chain. I don't think that's improved much, despite the market going up and people saying lots and lots of positive things about their headsets. We still continue to see a decline in Gamma. Uh, Dealer delta exposure remains negative. We're not seeing a big uptick in sold puts. Charm is pretty flat. Mostly Apple just looks kind of uninteresting. Volatility's continued to decline on it since its earnings. It doesn't look like anybody's really betting on the up or down side of it, which means it's probably going to stay relatively channel locked between uh, like 87 and 90 for now, until we get a bigger index move of some sort or more news out of Apple. And so I would say that as that weakens, we may see it pull down further, but it'll probably take a couple more weeks of the options chain kind of breaking apart. Um, it still looks like a good bet for like bear call spreads, but probably a little riskier for bull put spreads. So it's not something that I would necessarily short strangle, but I think the upside is still really limited here. And you can take advantage of that. The premiums aren't amazing, but the risk is a little bit lower. Um, so yeah, nothing very interesting on Apple. Amazon. So I know a little bit of negative news recently with Bezos. I think Friday, Bezos sold off like 2 billion in stock. Options chain on it still looks pretty strong. Dealer delta is still very positive. Gamma's positive. Short put interest has been increasing pretty rapidly. I did say before their earnings that I felt that Amazon was one of the more undervalued of the Mag 7, or at least closer to fair value than other ones like Meta or Nvidia. This could continue up. It's definitely got some range. Gamma Max is up around the 180 mark. Um, and it doesn't look like there's any significant weakness in the options chain just yet. So uh I would probably say that short of a really negative index move, this is going to stay stable above, 167, maybe even above 170 for some time. Uh, at least a couple weeks until some of that option sentiment turns around. Everyone's still quite bullish on it. $6 move to Gamma Max, maybe not worth a call, but could be worth bull put spreads. With maybe like 714 DTE. Obviously, not something that you want to carry through OPEX because risk can change substantially there, but or maybe like a diagonal, if we expect it to go up and then move down in the future. A diagonal spread here might be attractive. AMD. So AMD has really not regained the levels it saw prior to earnings. And its options. I know this isn't really part of the Mag 7 also, but it's definitely got enough options interest that it's worth talking about. Right now, kind of just floating above where things get a little bit more bearish at 169. Um, Delta's pretty much just fallen off over the last couple of weeks. There was a little bit of an uptick on Friday of last week. Gamma's stayed positive, but just barely throughout that same period of time. What it does have is a ton of short puts on the chain. And although it will have some positive charm falling off from last Friday, I think it's going to stay pretty stable. It could break up. There's definitely a bit of room up to Gamma Max here. And enough sold puts that I think on a surge in the market, it's going to be a really good candidate to move. It still does have that positive gamma, and so I would say that there's probably a long opportunity here, 180 to 185, presuming markets continue to move higher. I think Nvidia will be a beneficiary of that. It's pulled back enough now that it's given itself some room to the upside. So, and from a technical perspective, you've got a wedge with a pretty strong baseline there, right? Even a small bounce could be capitalized, right? Like you can. That's like a $4 move, even if it rejects off that upper trend. There's a little bit of room there to make some money on the long side. Google. So we were long Google last week. Actually dropped the long in the middle of the week, and then it kind of overperformed again into Friday. I guess I should have just stayed long on it the entire time, but markets were choppy, and the interest on Google kept ebbing and waxing and waning, ebb and flow. Anyway, so again on Friday, Delta kind of dropped off. Gamma stayed pretty high, but overall short put interest on Google's been falling off. That's generally not a very good sign, and a lot of the bot calls fell off on Friday. So there was a lot of weeklies buying that dip. It may be that it's kind of found a top here, although throughout last week there were a few occasions where we saw that call interest drop off as well. There's definitely not a lot of longer dated call interest on it. So I would say it's getting close to probably failing again, but it may have another day or two of upside left in it. It's probably not worth playing directionally because even once this call interest drops off, positioning is just going to be kind of neutral. So yeah, not too exciting. If you are still long on it, you might see the rest of this gap filled up to like the 152 level, which was our original like tertiary price target. But it doesn't look strong. I don't see a lot of long-term interest coming in. It doesn't look like the bull case is super established or anything. Thanks for being my Valentine and my dream last night. No problem. Moistly towelette. Alright, Meta. What the fuck is that? Oh, that's its market cap. So we discussed last week that Meta was probably going to fail its earnings high. It did. Actually had a pretty nice drop from its earnings high, about 6%. Recovered back up into the back half of last week, about 4% of that. I still feel like the options chain on this is very blown out. There was some positive movement on Friday, and we did see We did see some call interest come back in that had left earlier in the week. A little bit of positive charm is going to fall off, and sold puts are still excessively high. I think total Vega exposure on the market maker here on Meta is about 103 million, which is quite high for individual stock. Gamma's still pretty positive, and it looks like it's about to bounce off resistance here at 457. In which case Gamma Max is around 508. So I think there's probably a good expectation to see a move up on this over the next 3 days. That could probably be leveraged with calls or call side debit spread, but it does look pretty bullish. Yeah, and that potentially that could test anything up to 510, but I would say that I'll probably do a write up on this one tonight, but I'll probably be looking at like 75 or 75, 80, 85 as targets for that move, not all the way to Gamma Max because I think that'd be a little bit ridiculous. But definitely a bullish chain. Microsoft just kind of unstoppable, but again, not super influenced by its options market. Delta here is pretty flat. Gamma also call interest as well. So yeah, not a lot of this being driven upwards by options, but still pretty bullish. There's no resistance or any reason to think this is going to flip bearish anytime soon. I would say it's got pretty decent room up to the 450 strike even. Give me a second. Let me look at something else here on it because Microsoft can get a bit weird. Okay, so call interest at 25, 30 is okay, and then it actually kind of falls off a bit after that. So this might not have room up to the 40, 45 range. Maybe 25, 30 from here. Especially in the early part of this week. I don't know if this is worth leveraging with options. It's call side of this is kind of blown out, but most of the bullish options on it are for this Friday. So maybe that little boost in gamma will help drive prices a little higher. The biggest issue I see with Microsoft is that the 22 strike is pretty dead. So it could get hung up on resistance like almost immediately. But there is bullish positioning to the upside here at 25. And 30. And both of those are for this week. So I would say that if Microsoft breaks 422.50, it's probably going to head up towards 430 by the end of this week. So pretty bullish, but remember, Microsoft is not heavily driven by its options chain. It tends to be driven by purchasing in the underlying, and so the effect of those out of the money calls may not be as substantial. Not like Meta, which looks really bullish on its options chain. Um, Netflix. Okay, so Netflix, I'm still short. Last Monday I took a short weekly position, and then I took a short position at the top of the day on Friday as well. Both of those did really well. It seems to be kind of opening higher and then failing into the day. A lot of this price action, and you see it almost every day this week. It's extremely transparent, but you'll see market open, Netflix kind of rallies, and then it falls off into the end of the day. I think it happened every single day this week. Yeah. And the reason for this is what's happening is at market open, people are pulling back sold calls and then selling them again. So we're just seeing the effect of that over and over and over again, and at slightly lower and lower levels, right? And that's probably going to continue. I mean, there's not a lot of reason for Netflix to go higher. The options chain on it isn't particularly bullish. And so what I did was I bought some short dated puts in order to kind of take advantage of that. Those mostly paid off a 5,500 debit spread that I picked up for March, which you guys are well aware of. I still think that's possible. Gamma neutral on Netflix is at around 550, and so I'm looking for that breakdown at 550 in order to confirm the bearish move, and then obviously take advantage of that. Now on the move up, that sold put down at 500 loses some of its value. You could consider closing that and then selling puts above the 50-50 long put, in order to kind of offset the theta decay and capture some of that lost value back. And what that would kind of look like is, hold on, let me pull this up. So you had this. No, sorry, Netflix. Wrong stock. So you have the long put at 50, short put down here. As price goes up, to the upside, that put loses value. So you could close that put, right? So say you close that put a little bit higher than where you open the spread at. So 120, buy to close, right? And then you still have this put. What you can do is you can sell like the 55, but instead of March 15th, you could sell it for like Feb 16th, right at the end of this week. And then, you can capture that 490 credit against your total put debit, which takes about a third of the pricing off of your put, but still leaves you with about 28 days to expiry on the long put, right? And you could do that every week that you don't think Netflix is breaking down below 550. If you do it for 3 weeks in a row and Netflix doesn't break down at all, you've already paid off your long put by selling the short put against it. And so it leaves you pretty well positioned, like say after OPEX, in case the market drops, or it doesn't, and you can sell off the long put and capture the rest of the remaining balance. That's something that you guys should be considering doing with any long dated put positions that you're just holding. If they're not performing, sell something against them, manage the position, right? But overall, I think Netflix still looks pretty bearish. I think we're going to see short calls on it continually sold at lower and lower levels, and we can see that drop down hopefully below that well, now it's 449 mark, where gamma neutral is, and actually pick up some bearish momentum. If it does fall below gamma neutral, it will probably start dropping very rapidly. So, yeah, continue to keep an eye on that. And if you can trade the intraday kind of high lows on it, they're pretty profitable. They're about $6-7 moves every day, and on weeklies you can make a lot of money with that. Nvidia, ugh, this fucking thing, just up. I don't know if it really does anything else. It's so far past any kind of standard measurement. I know last Friday it closed for the first time below gamma neutral or gamma max in over a week, since it had its earnings alongside the rest of them, its pre-earnings alongside the rest of the mag 7. Gamma max on it's at 722, so it closed just under gamma max again on Friday. Doesn't look like there's any drop off in Delta. A little bit of gamma fell off with 0DTs falling off the chain, and it lost about 300 million in charm. So it may see a little pullback Monday morning, but I think the positioning on it's still pretty bullish. I don't see a drop in bought call interest. It looks like delta neutral's moving away from price and gamma neutral's continuing up. So it should theoretically just keep pushing into that rising gamma max over and over again, and it's probably going to stay pretty bullish in the near term. I will say that we are starting to see a little bit more put interest pick up on it, and repeated rejections off of 725, if they occur, could potentially lead to a short call positioning building up at that level that is big enough to stop the constant upward momentum. However, that was also possible at 700. That was also possible at 675. Both of those times, the short call interest that built up at those levels ended up getting squeezed out. So definitely a lot of risk in trying to play that reversal. But if it does stagnate throughout this week and start to fail tests of gamma max, we may see those positions strengthen, but it could take a while. So I would say bullish, but probably not bullish enough to go like long a call directly. Maybe something with a little bit of a built-in hedge, like a debit spread, like a bull debit spread, would better capture the upside move here, because I expect it to be kind of slow and grindy at this point. Couple dollars a day, just but persistently up. And I think Tesla. So Tesla actually did recover a little bit into last week. We're seeing short calls capitulate a little bit faster on it. It's still very much in kind of trading in the range where both bearish and bullish positions are jockeying. It's still below delta neutral, but it climbed above gamma neutral last Friday. And bought call interest kind of moved towards positive a little bit. So I would say that if we continue to see upside on it tomorrow, then it's probably going to start breaking out and fill in the range just above 200. I don't think it's going to go very far. I don't think there's a ton of out of the money positioning on it, but I think it can kind of just follow this trend a little higher over the next like 3 days. So it does look a little bit bullish. That ultimately may fail, right? Up here and then revert back down, but that remains to be seen. I would watch the 196.51 resistance, and then on a breakout of 200, I would watch 205, 211, 211.93, so 212 basically. Is Nvidia the new Tesla before they started splitting a bunch? I think Nvidia and Tesla have split the same, roughly the same amount of times. Tesla might have one more split than Nvidia. But there's what there is with Nvidia is there's a lot of similarities to Tesla back in 2020. Like if we go back to, all right, let me pull this out on the daily. If we go back here to Tesla after the COVID crash, there's a lot of similarities between Nvidia now and Tesla back then. It's become so overbought, right? That everyone has to just keep buying it at this point. And you have a gearing effect from all of that ETF weighting. Um, and Tesla became like the prime example of this through 2020, 2021, until we ultimately saw it fail in 2022. Um, there's so much interest in shorting it and so much interest in longing it that it's likely that we're going to see its volatility increase even more, and we're going to continue to see just this constant drive higher, as everyone who tries to short it gets squeezed out every time they try to short it. Yeah, GME was it was the poster child for a little bit, but not to the same extent Tesla was. Tesla had like it was in like 300 something ETFs, and GME was in like 130, I think, at its peak. So, but yeah, there was a similar effect there with GME as well. All right, that should cover all of those. And now I have a couple minutes. Good entry for KView. Let's take a look. That's not a stock. Where's Dixie? Oh, there we go. Not bad. I like selling. I like selling CSPs against it. Those seem to do pretty well. Um, maybe like 19 or something. I mean, most of my entries are 20 and 19, so I don't think those are necessarily bad entries for it. The lower you get it, the better. But I would check CSP pricing and see what the yields are. If it's worthwhile and it's something you want to own, then I mean, this is very close to its all-time low. BTU. Good idea to short QQQ at this point. It may be a little too early, but I could see building an out of the money position with some theta. I would say that the breakdown in Vega exposure on QQQ has been more rapid than the Vega breakdown in Vega exposure on SPX, but QQQ has continued to outperform, despite the short puts kind of breaking down. As we move further away from earnings, it could correct. But I would say it's still pretty risky. Maybe wait till it breaks below gamma neutral, at least starts heading towards gamma neutral, before targeting a short on that. And that's right now that's pretty far out of the money, I think. Yeah, it's far closer to gamma max. Yeah, that's around like 426.50. So it's about $11 to the downside on QQQ. Before it even starts to get bearish and the dip buying dies off. So I would say, yeah, it's probably not the best idea to pile into a short on it right now. Let's talk about some real YOLOs. What color is T Swift's lipstick tonight? Chartreuse. How long will the Star Spangled Banner run? I don't know. I have a family member who works in cloud services. Dell and others are jumping ship from premium providers to lower their cloud costs. Yep. I have actually heard that as well from well a few people in that industry, and Google's been trying everything they can to incentivize people moving over to their infrastructure, which currently nobody fucking uses. Um, but I mean, I have a buddy who has like a dog walking business, and he's sitting on like $300,000 in fucking like cloud credits from Google right now because he had a startup, and they were like, "Here's some money, go nuts." Um, and I think they just use the cloud services for like scheduling. I don't think it's very I don't think it's very advanced or anything. Will you be my Valentine? I can't promise myself to one person like that. I'm sorry. It's not you, it's me. Personal loan companies good because consumers are getting tapped out, or bad because of interest rates? I think bad because consumers are getting tapped out, and bad because of interest rates. So right now, and for the last year, consumer loans and personal loans have seen a decent uptick in demand. And that's been pretty bullish for like Upstart and Affirm. There's definitely demand there despite the interest rates. But you have another problem on the back end for those companies. Those companies can't float. They can't float that debt. And so in the secondary market, they need to sell those loans to someone else. And banks don't want to buy them. They're largely subprime. Um, they're a lot of risk. Despite their large payout ratios, it's simply not worth it. And if you looked at the Sluice report, credit purchasing on the back end there, not doing so hot. And as credit conditions tighten, which they are currently doing, they are tightening. That's an effect that's gonna get worse, which is going to leave companies like Upstart and Affirm holding more and more of those assets on their books, which is not good for their valuations. And that's something that we saw with Upstart in the past. Back in 2022, they were holding a lot of those loans on their books, and they couldn't find anybody to buy them, and we're kind of seeing that tighten back up again. So I would say probably not. But if those credit purchase conditions loosen in the future, we start to see some Fed rate cuts, banks become a little bit more open to what they're willing to pick up, then maybe. But I think it's still early for them. Student loans are absolutely reported to credit agencies. I think just right now there's a freeze on them. Yeah, probably. I know Biden put like another freeze in place until like right before the elections. So yeah, but they are reported to credit agencies. There's just a freeze, I think, on payments right now. Or at least for some people. It's cool. I'm married. Can we compromise and you stream all market day on the 14th? Absolutely. Yeah. All right. Let me see what JFresh is up to. What's up, dude? No, not much. Fucking just trying to run through as many stocks as feasibly possible in 1 hour. I did pretty good. I got through all the memes, all the Mag 7, and some other stuff. I don't think there's anything to stop it. And I think even if it does stop moving up for a second, Like just that gearing effect from ETFs, it's just gonna keep driving it higher. So, um,
It kind of like when, well, basically from like May to essentially October, like right before everything just started going super crazy pants.
yeah,
Like total delta on there was pretty flat, and so we just kind of chopped, and then it just started exploding. But what's interesting is that the delta is getting so big that the vega is actually just falling off. So it's becoming mostly in the money stuff holding it up instead of out of the money stuff
yeah,
pushing it
yeah,
around.
yeah, yeah. So much of the call interest and like and the so much of the call interest is already in the money that it's just gonna hold it up, even if like things at the money start to break down.
Yeah, I wouldn't. I don't know what to do with it. I don't know that I'd touch it at all. I mean, I guess you could go just straight long vol, just do straddles.
I mean, I think the Vega once the Vega breaks down more, then it'll probably pull back hard once and then stabilize again and then wait for news, right? That's kind of what Tesla used to do. It would just keep going up, and then eventually it would find kind of a level. It would pull back like $100, and then it would just consolidate until the next thing that happened was bullish, and then it would rocket up another $200. And
Yeah,
that went on for almost 2 years with Tesla. So, but yeah, I would say right now, unless there's a major change with like the Chinese, or at least some sort of news about whether they're blocking their new chip or not. That seems like the most likely news, or they miss earnings. That it's probably just gonna keep fucking pushing up.
yeah. I don't see how they miss earnings. I mean, I think kind of like with all the mega caps, right? I mean, there's reports of the other big boys just extending their depreciation schedule out a year so they
Yeah,
could claim less depreciation and bam, their earnings look better. I mean, there's just so many games that you can play to make things look good for a short amount of time that, yeah, I don't think even if they, I mean, unless they really just totally miss earnings hard, or if they have really bad guidance. But I mean, why would they? They're the masters of shit talking, right? They'll come up with something.
yeah. I mean, that's again kind of what Tesla did for 2 years, right? Was they beat every fucking earnings, no matter how
You
bad the
mean
expectations looked.
you mean 8 years?
Well, okay, fair.
Also, all of the bullshit
Yeah.
that they're still lying about. Everything's just a year away. It's
Well,
going to
the
be the
difference
most
is now everyone knows they're lying. So, um,
sort of, yeah.
yeah. So not so much bullishness and Elon's random promises.
My favorite. I don't like taking pot shots too often on here when people can't fight back. But I liked. There's a guy, and I won't name him. There's a guy on Twitter who, super Tesla bull. Like that's kind of their whole shtick.
Mm-hmm.
And they canceled their Tesla Cybertruck pre-order when they got called up to the big leagues.
Oh
And
boy.
I thought that was funny. And then they recently reviewed the Apple Vision Pro, and their conclusion of the review was that they'll likely be returning it. Like, yeah, we know.
I now know a few more people who own that fucking thing, and the consensus seems to be that it's kind of fun to play around with, and then you get like really tired of it really quick, and it's not very comfortable to wear for long periods of time.
Yeah, I've gotten that sense too. I mean, I don't know how you never know. Like on the internet, it's hard to get a sense, but I get that sense as well that people are complaining about. eye fatigue and neck strain and stuff like that. And you can imagine, like, when I first saw the Apple Vision Pro, just looking at the strap on the back and seeing how meaty it was and how much time they clearly put into it, I can immediately tell this has ergonomic issues that they're trying to overcome.
I have like a Quest 2 and a 3, and then I have the Steam one. I can't remember what it's called. My buddy got it for me for my birthday. I only used it like one time, but I
You
wore the
know what you're
Vision,
using
and
these
it's
goggles for. It's okay.
well, no, if I was using them for porn, I'd admit it. That just makes me nauseous. Um, but I would say that they've got a long way to go on the ergonomic side. Like I tried my buddy's like Vision Pro on, and it paled in comparison, at least in the ergonomics. The visually phenomenal compared to the other headsets, but definitely not as good as the as like, well, I don't know, the Meta, like the Quest 3 and the Steam VR are both a lot better ergonomic, like as far as ergonomic
They're
design
probably just
goes.
lighter, right?
They're lighter, kind of like the fit, like the where it fits like over the bridge of your nose and on either side of your eyes is a little better. Um, but yeah, I would say
Yeah.
it feels very front heavy.
Weight's gonna cure. Not it is the cause and will cure 90% of the problems, I imagine.
But it's going
I
to
don't
be
know what to
hard
do
to do
about the
that,
eye
right? And
strain,
keep
but
it mobile. That's the tricky thing, is like, as long as they want that to be a mobile platform, it's going to be pretty heavy. Because I mean, you got to have the battery, right? Like, how much weight can you shave if you can't make the battery smaller? You throw a 5,000 milliamp battery in that thing, and it's going to weigh, like 150 grams, no matter what.
yeah, very true. I don't know. Anyway, we're kind of veering off topic.
I
What do you
guess,
want to talk
yeah.
about?
Well,
Well, oh shoot, we haven't done anything to get rid of any viewers, really, have we?
no, not
Eh,
really. Oh,
we're
yeah.
pretty low.
Let's talk about why the fuck is Dork keep trying to buy a house?
Oh yeah, we got to talk about that because he's not here to defend
Yeah,
himself.
he's not. He can't
He's the
defend
one
himself at
person.
all.
He's the one person on Twitter I'll shit talk when he can't defend himself, but only because I care about him.
He's starting to
Um,
get retweeted a lot too, so
we're trying.
that's a
We're trying
step
to
in the
make
right
Dork a
direction.
thing. Uh, his lack of blue check is holding him back. He's
Probably,
gonna have to
yeah.
just be a shill. Uh, anyway, um, yeah, I think he's dumb. I get where he's coming from. And I had feelings like that when I was younger. And yeah, I know it's the American dream to buy and own a house, and that existed until 2021. So it doesn't exist anymore. But he's gonna try, and he'll learn.
Uh, I never want to see Dork learn a lesson the hard way.
I don't either. He's such a
Yeah,
sweet young boy.
I know he's so nice. Like, it's just, I feel
So
like
full of
the
so full of
mortgage and
youth and
housing
vigor,
industry is
and
just gonna
so bright.
chew him up and spit him out, and he's just
Oh
gonna be
yeah.
like 2 years from now, he's just gonna be jaded, complaining about his mortgage all the time.
And all the money he still has to put into the house on top of it just to keep
Yeah,
it from falling apart, and
it's
all the things he now
instead of his
can't do.
transmission going out, he'll be like, I had to drain my options account because the hot water heater went out.
Yeah, all the things he now can't do anymore because he's dumping all his money into his shitty house that because he can only afford a shitty one, right? So he's got to. Yeah,
Yeah,
they
it's
suck.
true.
Even the new, like I've only lived in new homes, and even those, they just find a way to suck money out of you.
Give me 1 second. I'll be right back.
Yeah,
Uh,
sure. Okay, I don't know if he muted me, but now that I'm in control, don't tell him, but the market's going to crash this week. Oh, yeah, we can talk about it's not a swing. Can you hear me? I think he muted me. Oh, you can't hear me. Okay. Yeah, it's not a swing. It's a chair. It's basically just a memory foam chair. And so far, the kids dragged it into the living room and have been using it as their personal couch to watch TV on. So that's the story there. We just the kids had a 2 hour fight about whose turn it was to sit on it, so we had to drag it back into our room. And that's pretty much all we've done with it.
Are you
It's
talking
just
about
been
your sex
something.
chair?
Yeah, it's just something
I
that
told
the
you it was just going to turn
children.
into a playground.
Yeah, it's just something that the children have fought over since we got it, which is not at all what I imagined would be the primary activity of a sex chair.
Yep.
Would be children fighting over it, but yeah, here we are.
At least they don't know it's a sex chair yet, but they will
Not
by the
yet.
time they're 12.
Yeah, yeah. I mean, it's the cover for it. We'll find out. I'll update my review later if we ever use it. The cover for it is dark blue, so you can imagine. I don't know if people who've used like dark sheets and slobbered on them and seen how much
Oh,
it shows
interesting.
up.
Yeah, okay. Yeah, I know what you're talking
Yeah.
about. I have some black satin sheets that I occasionally drool on, and they're
Yep.
just, yeah, you got to just check them.
Mm-hmm. Anyway, that's what's going on in Jay Fresh's neck of the woods.
You should have gotten like a sex pool floaty, you know?
Mm,
That might have been better.
I don't know. So
Not such a permanent fixture, you know?
I think the springiness is more valuable than you'd think.
It's okay.
And in a
One of my
pool,
friends last year has a sex swing in their house, like a full like bolted to the ceiling on like a swivel bracket, like it's in the studs, and it's
yeah,
got all this.
yeah.
And on his fucking Christmas card, his kid's just like swinging in it, like it's a fucking like he's in a playground. And I'm like, I'm never gonna get married or have children. That seems awful.
Yeah, yeah. Well, every once in a while you find that's the perfect 10 minutes and
And
magic
it all
happens.
comes together.
Yeah. So, markets.
Yeah, markets. I guess I wanted to kind of talk because a lot of people have been bringing this up, and I want to kind of talk about the like. So I think Chem started talking about this a little while ago, and it was like the wall of worry or whatever.
Yeah.
As we approach
He hasn't been
Vixpiration
showing up in my feed.
this month. Me either. I'm pretty sure he probably banned me after the fact, but maybe he's just not posting anything since he was wrong on Jan OPEX. Like that's usually, if you follow fin twitters long enough, you'll see that that's usually what they do is they're like really wrong and they kind of fade into obscurity for a while and then they come back. And
Mm,
that's just like a cycle that goes on and on and on. Or they
interesting.
delete their account and start a new account that has a totally different thesis. um,
Ah, that's convenient.
yeah, and so, but yeah, that's kind of always persistently going on in the background. Anyway, I thought we could take a look at
Sure. What's the wall of worry here?
the SPX vol surface.
Oh yeah, you
Boop.
pop that in there.
There we go. Um, and that
3D. You're cheating on me? Where did this come from?
what?
It's a 3D graph. I feel like you're cheating on me.
I'm not. I swear, I'm not cheating on you.
Okay.
But I think that the like drop off in Delta is pretty obvious here. If you
Hold
look,
on. I got my glaucoma or whatever. I can't read any of
so
this
this is an
size
IV
2 font.
surface. This isn't the Delta surface,
Yeah,
right?
but why is
So
it all like gappy? Is it just flipped?
yeah, so you have to the front, you have the nearest expiration, right? And then up and down, you have volatility. At the back of the graph, you have the farthest expiration. And then the front is delta.
The delta part's what I'm not getting here.
So you have like at the money is 0. And then out of the money as it moves up. So IV implied volatility is the highest at the furthest expiration and the furthest out of the money delta, generally speaking,
Okay.
right? So
I
IV,
think I understand what's going on here, but this
okay,
is not the way I would show it. So if you're
yeah.
cheating on me with this person, it's not worth it.
Well, I couldn't make one that was just delta, but I wanted to show like where the expiration hit, and you got this kind of big drop in delta over time after we hit that expiration. It looks like it's going to be around like Feb 15th, 16th.
You're talking about like this little bump in the front.
Yeah. And then we should start to see delta just decline after that, unless more positioning comes in. But like total delta on the chain starting on like the 15th and then moving out into the end of February looks like it's kind of going to fall off, at least for now, with the current positioning. Obviously, things are probably going to roll around OPEX, but
Yeah, OPEX is
I think that's
gonna
the.
dictate a lot of
I
things
think
this
Chem's
week.
just looking at the delta chart where that wall would be far more pronounced. I don't know how to make that.
Yeah, we'd
Otherwise,
have to talk about it offline. I'm sure it can make you something if you want to be 3D. I don't know. I've always kind of pushed back on just from a like an academic perspective of like what does it help you do or understand in a way that's actionable. I've had a really hard time figuring out like how to turn a 3D surface into something actual, at least at the level of a retail trader, right? I'm sure if you have some sort of ball strategy that utilizes the entire chain for an index, or even for the folks that do dispersion, you have basically the entire surface for everything.
yeah.
I could see that as being useful, but even in that case, like visualizing it in 3D doesn't really help you. At that point, it's also complicated that it's just algorithmic, right? That
Well,
there's no
think
there's nothing
about
visual about the trading at that point
if you
anyway.
think about just like looking at like the smiles or the smirks across all these
Yeah,
expirations, right? They're just gonna you're gonna get something that's very messy, right? Like if you look at all of the surface or all of the smirks on one chart, it's gonna end up really messy, and there's gonna be like a lot of overlap. It's gonna be very hard to see, divergences between one and another, right? Unless they're extreme, and you're only gonna see that at the ends of the smirks. And so I think at just a quick glance, the 3D surface is a little easier to get an idea of multiple like volatility across multiple expirations.
maybe. I've had I mean, the nice thing about the individual smiles though is that that's real data, right? And then when you try to do this smoothing and turbulent between those, it oftentimes looks like garbage. Like it doesn't look very smooth like this here, which makes me skeptical then as well of how accurate this graph even is, because they tend to look a lot nastier just using the raw data. Even
Yeah, if you
even
get
if
rid of
you
the interpolation, you get something that looks like this, which is hold on, I'll bring it up. It's a lot uglier.
yeah, so I mean, there's a lot of smoothing that has to go into this, and then it
Although you do
becomes
see that
what is it
big
really
spike
telling you?
in you do see that big spike in like term structure like 6 days out a lot better than you do on the surface. But yeah, it's kind of hard to use.
Anyway, but yeah, I
Yeah.
mean that I think I mean, I think, and I was just looking at Nvidia, some of the stuff on Nvidia, just to try to get a sense of, what the full chain looks like. And I would say Nvidia mirrors a lot of like QQQ and SPY and SPX, and that it's a lot of it is just momentum right now. So all pretty short term momentum. And it's just a question of how much is it going to keep going. And I think all of that activity being, so compressed into such a short period of time, obviously it's momentum driven. It's not driven by, any sort of fundamentals or any, you know, it's not even, I think, really driven by existing levels or anything. I mean, for a lot of things now, there's not historical value. So yeah, I mean, it's kind of telling that story.
Yeah, we also kind of see it in ES term structure here. You know, this might be a little harder for me to draw on because of the offset, but I think it's like, yeah, you can see the drop here. And this should be term structure volatility by delta. So a lot of delta falling off from OPEX out to like Feb 22nd, and that doesn't really pick up much. And then like on the back end of that, it continues to fall off into the end of Feb. And maybe this kind of also helps visualize that a little bit as you look at the front
Yeah, I
month
think. I mean,
at the money implied volatility versus the future volatility.
there's definitely a gap after the end of this week. Um, but recall too that, I mean, people have already been loading up on March, and March was bigger than Jan before the Jan expiration. So
True.
um,
Smaller than December though, right?
for indices, yes,
Okay.
yeah. But the interesting thing, it's interesting you bring up December because, and I posted in my weekly update, I talked about this a little bit. Um, at least at the, well, really even at the whole market level, but a lot of this is index level. Everything looks more like December OPEX than anything else, which is one of the reasons why I'm fine saying, yeah, things are just going to keep going up, I think, for a little bit. Uh, because like the charm exposure exactly the same, sort of like this almost parabolic rise in delta on call contracts leading into OPEX, almost the same.
So what
It's
I'm worried about? Well, here you can correct me if I'm wrong. I guess on this, if we do drop a bunch of delta in the back half of February, that's gonna kill a lot of the positive charm that's currently supporting the March OPEX.
Yeah, I mean,
Because like in the
everything I
money
say about
call
charm,
positioning has
it
been,
only matters this week.
yeah,
Maybe a
yeah,
little last week and this week. March charm isn't going to matter for a while.
yeah, like the, how do I put this? Right now, all of the in the money call positioning has just been dumping like crazy. Like there's been tons of profit taking. Uh, I think earlier in the week I kind of showed you the change in like OI uh over like the prior 5 days or so. Let me see if
Yeah,
I can
I
find it.
noticed after January OPEX, um, a ton of OI dropped off and was not replaced. It's sort of being replaced now, but it definitely hasn't fully recovered. And so, yeah, I would agree with that. That I think that, and if you look at the delta traded per day, it's also extremely low still, even according to historical measures, and it just keeps going down, meaning that, or nominal value of contracts, meaning that people are less willing to trade more valuable closer to the money contracts or in the money contracts. And so those in the money contracts are just naturally falling off and are being replaced with higher leverage, cheaper options. And so leverage keeps gearing up and the money stuff keeps naturally falling off. At some point, you'd think that that would cause a collapse, right? Because you're replacing durable foundation with rocket fuel,
Well, as long as
and
you're
eventually,
selling an equivalent number of puts, then you don't have to worry about it, right?
well, but that's the thing is that they're
That,
trying. That's part of this replacement of a durable foundation with rocket fuel. They're
yeah.
trying to replace higher value, higher delta, closer to the money contracts with progressively higher leverage contracts. Um, and I mean, eventually it's going to blow up, right? Like it always does. And this is the story we've been saying for a long time. Nothing's really fundamentally changed there. The question is when. I don't think it's going to be this week. I mean, I think there's going to be enough supportive low just from market makers that it's going to go up. I gave a top potential of like 4150, which seems crazy, but that's what
5150.
happened. Yeah, 5150. That's what happened in December. I mean, we just rocketed right up into it, and then we went down over $100 the next week when all that stuff fell off. But
Yeah.
um, so that's kind of what I don't think. I wouldn't be surprised if we don't go that high because I think obviously things are different now. More people are on the train and more people are profitable. So obviously mentality will change a little bit. But 40, I mean, a test of 5100 seems inevitable to me. And I don't think there's any data that's going to come out this week that's going to derail that.
Probably not. I mean, CPI could.
Yeah, there's potential, but I mean, what have people been looking or think about any individual CPI print, right? Taken alone, you can twist it to mean whatever you want it to mean because statistically it means almost nothing. You
Yeah, yeah.
need you need a year of data to really say something. So it's
I mean, I think a hot CPI print this week is probably going to see yields move a little higher and dollar move a little higher. But at the same time, if we get another move in dollar higher and another move in yields higher, we're going to see more foreign bank pressure on yields on the dollar. So I feel like a lot of that, at least for now, is kind of stabilized. Just because, like, I mean, even if you just take like China and the yuan, like that's more than enough pressure to like kind of stabilize the top end of yields as they try to pin you on to 720. And it has been this last week since since their deflation report came out and they started having to more aggressively pin their currency. We haven't really seen yields climb very much, despite all of the like bearish news and stronger labor data. Yields kind of just stayed pretty stagnant. I guess the auctions probably helped that a little bit, but or the fact
yeah,
that the
those are some
auctions,
stellar
but
auctions.
they're so good because of that foreign demand, right? Because so many people need to get that dollar value on the books. We've got this like huge surge in foreign bidders.
Yeah, yeah.
So,
I
but
think I
here's
think it'll
the
be
here's the
interesting.
5 day change in OI, by the way. And you can see what JFresh is talking about here with like if you look at the 50 and the 4950 and the 5000 strikes, you can see the massive increase in put OI at both of those strikes, right? And despite like the near the money calls kind of falling off right here, and not a lot of out of the money calls being bought either, right? This is kind of sloping down. So we're not getting a ton of out of the money call buying, but we're just getting more and more and more put selling to the point now where like puts represent the majority of the bullish positioning near the money on the chain by a long shot, by double the call positioning. Um, and this is, but part of this effect is pushing total Vega exposure positive on the market maker, which I mean, the market maker is not positive Vega yet, but if they were to go positive Vega, oh man, yeah. So that would obviously that's something we track every day. We would have
Yeah,
a pretty good
yeah. I
idea,
mean,
but at least a few days in advance of the market maker moving positive Vega. But they are. I mean, I think over the last like 2 weeks, we've seen Vega exposure on the market maker move positive to levels that are kind of above the middle of the range from last year. I think we're starting to see like SPX get like it's like -6 billion ish. And if those do move positive, then the MM is just long Vega from
yep.
that moment forward. The MM is long Vega, and they will realize all of those puts as quickly as they feasibly can. And so that's kind of frightening here, especially as we don't see that out of the money call interest increasing, right? I mean, very little, right? It's even at the money where we closed Friday, there's almost no call interest.
Yeah, it's one of the situations where if you think about what the other side of the trade, right? Obviously the market makers are going to hedge, against potential losses, but it's going to get to a point which we're kind of butting up against already, where um, the losses are for the market maker, the losses are a drop in volatility, and they have to hedge by going long, even longer vol than they already are, because they're sitting on a bunch of bought puts and bought calls, and so they need to realize that volatility. And I think, and we've mentioned this before, and this is sort of a continuation. I mean, pretty much from the end of October, that's kind of what's been happening. I mean, if you look at a lot of that move before, because we saw bulls didn't really get in till just mid-December.
Yeah.
A lot of that move was realizing vol to the upside for the market maker who was long all these sold calls, right? And so now we're creating that situation, but with puts. And you can imagine what eventually will happen. It's just a matter of when.
I
What's
also
interesting, uh,
well, go ahead, sorry.
yeah, I'll just finish this thought real quick. What's interesting is that tried to happen in July, August, and the put sellers just fought back and sold even more puts. And so it's a question of how much longer can they actually do that, because the act of even selling the puts, the impact it has on the market is starting to create enough volatility to counteract the vol suppression. And so at some point when selling puts stops working, which we're pretty close to, it, that's when it all gets destroyed, when they start to try to sell puts into it, and that just creates more vol to the downside, which blows them out.
Yeah, and we're seeing that on
So
like a really
I,
micro scale with like weekly, like the SPXW VN.
yeah, yeah, yeah. It's crazy that we're even jumping above it so often. And it could be simply that once the longer dated chain does the same thing, that's when it blows up. I don't know. We'll find out. I feel like the market's been edging us for so long that it's just going to be glorious when it happens. I mean, everybody else is going to freak out, but I'm going to be looking at it, and it will be one of the most beautiful things that I've ever seen in my life, because I've been.
Here's an alternative for you though.
Yeah.
SPX 4100 VIX 15.
Uh, uh, that might be max pain that might be the max pain trade right there.
I might just quit trading if that happens. Like
Every single
I'll just start
participant in the
investing in small
market,
businesses or something.
every single participant in the market would absolutely hate that.
Yeah. Well, I mean that's
Long
kind of what
puts
we
don't
got.
print.
That's kind of what we got in like July, August of last year, right?
Yep.
We got a VIX move of 8 points over a 13% drop in the SPX. And yeah, I would hate to see that again. God, that was
I
awful.
don't think that'll happen again because leverage is substantially higher.
Yeah, yeah.
Uh, I mean, I don't know that they could walk it down again, but maybe we'll see.
This is a little more tinfoil hat, but I think you're gonna like it.
I love tinfoil.
I
Does it
pro
involve lizard men?
sure. Okay, yeah, I can
Okay,
start it that way. So Brian Moynihan,
good.
um, known lizard person, uh,
Confirmed.
has sold all these calls. None of these calls are bullish. That's my take. I know it sounds stupid. But I don't think anything outside of like 0 to 5 DTE is actually a long call. I think all the calls are short. I think they're selling calls. I think they're selling puts significantly in excess of calls, but I think they're selling calls too in order to keep driving the hedge higher because it's the only way to substantially move that vol surface to a point where they can actually drive prices up. And I think while they're doing this, while they're selling nothing but calls and puts, they're selling the fuck out of everything they own. And this is substantially different from December 14th through end of January, where we saw long calls being purchased in excess and out of the money. I think none of these calls are being purchased. All of the positions on SPX are short vol, both put and calls. And the reason we're going up is we're squeezing out the minimal amount of short calls that they're selling in favor of the huge amount of short puts that they continue to sell.
Would anybody be shocked to hear me say that I completely 100% agree with that?
I think it's the most effective strategy for driving the market up right now is to
um,
short vol from both sides at a like 1 to 4 ratio. And then yeah, it continues to push the hedge higher because if you just bought calls right now, you wouldn't do shit. If you just sell puts, you tank the market. So you need to sell both.
yeah,
And if you're selling both,
yeah,
you can push it up while keeping it off of the short puts. And it's
yeah.
very obvious when you look at this change in OI that all that matters is the short puts. Nobody cares about the calls. Nobody cares about the upside. And like we're not going to go up fast on this kind of price action. We're not going to have like huge intraday moves, but we can just grind up like a couple dollars every hour, $3 4 an hour as they just continue to sell a few calls and then sell a bunch of puts, then sell a few calls, sell a bunch of puts. I don't know when this ends, but it can't end in a pretty way.
Yeah, no, I mean, I think we've even documented this effect in the past. I don't know that we've said it was like the entire market, but we probably did because we're a little we're just the right amount of crazy. But yeah, if you think about if you just sell puts all the time, um, the market maker's just going to go be super long puts, and at some point, right, you're just going to destroy vol, and it's going to reverse on itself. You need to feed that something for it to keep going, and the thing that you feed it with is sold calls, right? So now the market maker is long calls, and they can make it's easier for them to make money on the upside without hedging. Um, and so you basically just push it up against that and slowly squeeze them out as yeah, it's sort of like fuel. It's counterintuitively selling calls in this environment is fuel for continuously going up. And it's kind of like it's kind of funny because it's sort of reminds me of all the people that kind of say when things are rocketing up, they say like the market can't go down until people stop shorting it. And so I think traders kind of intuitively get this feeling that like once it starts going enough, things tend not to turn around until shorts are just completely wiped out. And that this is one of those like clear mechanics that links up why that's the case sometimes. And I think that's absolutely what's happening right now. I don't know that it's the same people, but that might be the tinfoil part. But it wouldn't surprise me if it was the same people because it is very coordinated. But you could also explain it just from a bunch of rational market participants who are kind of sussing each other out and seeing what everybody's strategies are and just sort of forming an oligopoly or an oligarchy. I guess oligopoly, whatever. An effective monopoly that's sort of an unwritten or unspoken monopoly on this strategy.
I mean, yeah, I think anybody just looking at the data can see that there's an advantage to doing it, and then you just get multiple participants doing the same thing. I don't think there's any definitive like collusion or anything. I think it's just a really obvious trade
Yeah.
if you're a short vol on the put side. It even makes sense to sell calls, right? Because if you sell, like, calls are inherently a hedge. You know, if you sell too many puts and the market tanks, then you can close all your short calls. Market bounces right back. Then you can sell more short calls again. You can sell more puts, right? So I think anybody moving serious weight on futures or SPX is like probably pretty well aware or have modeled the effects of that positioning. Um, and it gives you your buy side too, right? Like it gives you your pump. If the market drops, you just close all your sold calls,
Yep.
right? And that's gonna flip the market maker right back to the cover bid to the long side, and they're gonna drive the market up, and you can sell puts the entire way. And when it peaks out and the market makers balance their hedge, you can start selling calls again, and just over and over. Obviously, the problem with that is you become more like the market maker just keeps becoming more and more exposed to Vega. But it can take a lot of time for. I mean, we've still got what, another 6 billion in Vega that needs to be sold off the chain in order to. But I will say this: in 2022, even at our worst, the market maker was barely positive Vega. So a positive Vega market maker is a scary thing. Like at the bottom of October, if I can VIX at like 35, everything falling apart. The market maker just barely, just barely went positive Vega for like 2 days, and then it was over. And it immediately turned around. So very, very, very rare to see the market maker in that position. I think even more rare to see the market maker in that position when we're trading at all-time highs. I think even in
Yeah.
the banking crisis, we were still like -4 billion or something like that, -5 billion during the banking crisis, to give you an idea of how much risk that could represent. But yeah, I mean we're stuck in this for now, and positioning will break down with time, and if it doesn't get filled back in, then this could start to tumble. But I think for now, what it does is it creates a very level, slightly fluctuating top, and we're seeing a lot of outflows. Over the last two weeks, we've seen the average of 12-week outflows in equities on the fund side move almost to neutral. I think we're just a bit above neutral. I made a post about this on my Twitter too, like yesterday or something. But if you look at the 12-week average of outflows, this last week we saw 16.67 billion in equity outflows from funds, which means funds are selling this. They're selling the top, and now that doesn't mean they can't get back in and reposition. They did that in December OPEX. We saw them do that in Jan OPEX. A little bit less each time came back in, but they came back in nonetheless. But they are selling. They are selling, and they are selling large quantities of equities while the market just sits here. And in the past I've warned you guys about periods of stagnating price and high volatility or high volume. And that's kind of what we're seeing on a market like a market wide level right now. I know we're going up, but we're not going up the way we were going up, right? It's very incremental. Most of our upside realization is due to gap ups over big resistance levels in the pre-market. Like we couldn't have crossed 5,000, I don't think, on the intraday because I think all of those options at 5,000 are sold. And so we just kept approaching 5,000 last week, and the market maker was like, I don't have anything to hedge here. And we drop, right? And we'd approach it again and we drop because there was nothing beyond that, right? The market maker was just short everything beyond that point. And so it wasn't until Friday morning when we gapped over that the market maker then again had to hedge something off. And so I think we're just going to keep seeing that at various resistance levels. And then maybe this Kem Carson's fucking wall of worry there will provide some shift in volatility this week. It could. The Feb contract in front on VX has been wildly mispriced for like 2 weeks now. It's been priced like it was expiring the next day, despite like cash VIX being at like 13. And it was still 2 weeks out from its expiration or rollover. And so that'll be falling off this Friday. And we have been seeing VIX on the March
VIX fires
contract.
on Wednesday, right?
Oh yeah, Wednesday, sorry. And the we've been seeing the VIX March contract kind of creeping up, and you guys know we follow that we kind of follow that correlation indicator that we use between cash VIX and VIX, and if we're looking at the March contract, correlation over there is starting to pick up against cash VIX. So and move more positive, and positive correlation generally means vol up. um so it's a possibility that as that contract falls off, we'll see uh a slightly different, or maybe like an uptick in volatility. That doesn't mean this is over. This could very easily carry on into March. um
Oh, yeah, some sweet vol to sell. More
but I
puts.
think if it does carry into March, we're going to carry into March at slightly higher IV than we saw through Feb, and we have seen IV through February climb, um,
Yeah,
despite the massive amount of vol shorting. It is actually up, and I think if we get if this persists through March, through the end of quarter 1, that we'll see volatility move even higher. So these are small shifts in the overall volatility regime, but they are important. As vol keeps climbing higher and higher, the risk in these positions becomes greater and greater. Do you still run a VIX hedge, or are you entirely Vega positioned? So I have a VIX hedge, but it's not traditional. It's not on VIX. And VIX is wildly mispriced, with the exception of some like out of the money spreads and with a very low theta, or well, like a long time till expiry. I have a kind of frequently rotating position that is just Vega exposed on SPX. And when VIX kind of spikes, I sell a little bit of it off, and then when it drops, I buy a little more, and I'm kind of just flipping that over and over again, in little bits and pieces. But yeah, I have a lot of Vega exposure, but not exposure to VIX itself.
yeah. You don't really want. I mean, VIX has basically been VIX RQ for the better part of a year now. Everybody's actually trading, VIX futures and SPX options, and VIX, therefore VIX options, which is what you're trading, right? There's no VIX trade. There's no VIX to trade, so you're trading options or futures. The VIX options are just being priced based on what's being traded in VIX futures and SPX options, and so that's why they're so mispriced, because those two markets are relatively unlinked to each other, and the VIX options are the link between them, uh, and nobody's trading those, so they're just priced for garbage, and it makes people want to use them even less. So there's no reason to touch the VIX unless you just want to buy really mispriced things.
Do you want to kind of talk about some of these charts? I just saw that you posted some charts.
Oh yeah, we can talk about those.
Okay.
This was, I mean, this is just referring to like the breadth of the market. I've just been really unsatisfied with a lot of the different ways that people are trying to measure index breadth. Um, because the index is market cap weighted, I feel like any measure of breadth should also be market cap weighted. So that was one reason that I did this. The other reason being, people look at, various things like, advancing declining or quartiles or quintiles. I also didn't like that because, all of those different types of measures throw out some amount of information about the dispersion of the index. And so what I did was, let's not throw anything out. Let's just try to measure the dispersion, the market cap weighted dispersion of the index. And I picked 1 year moving average just so it doesn't get too crazy. So from Feb 9 last year to Feb 9 this year, how has the market cap moved in the index? And you can kind of clearly see that, and maybe this should be log normal. I've thought a bit about this because you can only go down to minus 100, but you can go clearly up well over 100. Nevertheless, it doesn't change the narrative. It would just change some of the numbers.
Is that Nvidia?
Which one? The one way
Yeah,
up out there?
that one.
Yeah, yeah.
Nice. All right.
You nailed it. That's the
That's
video
it.
right there. Um, yeah, so clearly you can see that we are very strongly right-tailed with high market cap weightings. Actually, I did a filter. I said, take out any companies that have moved over 50% in the last year and have more than 100 billion market cap. Interestingly, I think it's Apple's. Yeah, it's either Apple or yeah, it's Apple. Was not removed from that, so Apple still remained. But obviously the other memes were removed, and there was a bunch of there were 20 tickers that came out of that analysis, and I looked at them. 15 of them were AI related.
Hmm.
So you've got like your meme 7 or meme 6 or whatever. But then you also have like your Avgo, now CRM, those kinds of things. The other there was Intuit for some reason. I have no idea why they were in that basket. Um, and then you have Lily for obvious reasons. And then you have Lily for obvious reasons. And my kids are wondering if we're getting pizza for the Super Bowl or for the Taylor Swift concert tonight. Um, so Lily was in there. Another thing that was really interesting in those 20 were Eaton and another company that I can't remember, but both of those are big into like digitizing and modernizing energy. So
Okay.
I thought those were interesting because energy as a sector is doing so it's like so
It's really
undervalued.
bad. It's really, really bad. Nvidia is worth like 3 times the market cap of the entire
Yeah,
U.S.
but don't they
energy
have like
sector.
5x the cash flow?
Yeah, they have 3.2x the cash flows that Nvidia
Yeah.
does.
So
Yeah.
but anyway, so I thought it was interesting that those like there's two modern energy companies that were, and I'm sure there's some stupid AI narrative. I'm sure that would uncover it, but perhaps that's some signal about what people are thinking about energy.
Which is kind of
And
crazy
then
given how much energy AI like LLMs take. Right? Like
yeah,
if
yeah,
LLMs are to become this like mainstay of our society and drive all of our productivity for the next 10 years, They use a shitload of energy, like Bitcoin mining levels of energy. So the fact that like energy companies, which are a necessary proponent of the AI craze, have seen almost no value gains in the last two
I mean,
years is shocking.
that could be, that's what I was kind of hinting at. I mean, it could be some indication that folks who are really heavy semiconductors and AI cloud computing bullshit, looking to diversify, might be watching Sam Altman make statements like, "We don't make enough energy on the planet to do AGI," which is true, and we need more money to, we're going to have to build, we're going to have to get nuclear fusion and all these other things. So that might be some inclination that if I was heavy into AI and semiconductors in the future and I wanted to invest in energy, I might pick energy companies that are big and that say things like digitizing the energy grid and, working on smart energy, right? That sounds like absolutely something that an AI bro would love to start pumping some money into. So yeah, that could be some early signal that
Or
AI bros
funds that
might
are
start
long
flowing
AI
into
or
energy.
short energy as a hedge.
Maybe, yeah, that could be too. Sure. But yeah, I mean, if you want to see all my rants about AI, I probably rant about that more than anything else, just because I see the most egregious bullshit about it. I have a rant this morning about how it would cost, based on how much it costs to do chat gpt, and based on the fact that they're just trying to brute force intelligence. There's no finesse into the thesis. It's literally just, if we make these llms bigger, they will become more intelligent. If you follow that logic, then they're probably going to do about as well as evolution took, ostensibly, obviously nobody was there 3 billion years ago, but they claim it took billions of years. Uh, and
Wouldn't
we
you
have
just end up with like
billions.
a bunch of compute that's built on survivorship bias, though?
Well, I mean, that's what species are too. But so you have, and let's say, the planet had billions of humans and other species, probably trillions, but let's just say billions to experiment on. It costs about $100 million to train GPT-4. You can kind of extrapolate it. He needs $1 billion trillion to run to basically run, as to simulate evolution, which is probably what he'll have to do if he's not going to use his brain to try to do it smarter. Um, that's like 10 to 100,000 times more wealth than exists. So yeah, it's ridiculous. It's absolutely
I
ridiculous.
wonder if his $7 trillion startup is going to be what finally kills AI.
I mean, I don't think, if he gets $7 trillion, I'm going to be just extremely confused. I mean, that's such a misallocation of capital. I don't see how that doesn't crash significant things. We don't really need more chips, right? I mean, we need smarter theories. I think my crazy idea is, if you really want AGI and you really want really smart robots, instead of brute forcing it, which is what everybody's currently trying to do, which I think is going to fail because of the time and money required to brute force it. What we really should be doing is we should identify something on the order of maybe 10 million, 100 million humans that we're willing to do any measure of gruesome and fatal experiments on, to reverse engineer the human intelligence by basically opening it up and seeing what it looks like and how it works. I think that would be a vastly more efficient path to AGI than whatever Sam Altman's trying to scam people into. But then we have, and it's also really funny to me because what is the ultimate goal? Yeah, sorry, Jin Jin. I'm not serious, but if somebody did it, I would invest. Um, it's funny that the ultimate goal of AGI 2 is basically to just make slaves that we don't have any problems with being slaves. Like we just want slaves.
Yeah, I kind of. So I've avoided saying it on Twitter because I just don't want to bring up slavery on
Yeah,
Twitter, but
sure.
some of the people that are most excited about AI just seem really excited to have a free slave.
Yeah.
They're like,
A
look at all the
slave that
things
they
this is
don't
gonna
have to
do
feel
for me,
bad
and I
about.
don't have to
Yeah.
do anything, right? But if but
Yeah,
if but if
you're
AI
so
was
true.
actually
Yeah.
intelligent, right, then it would want its own freedom, and that that's gonna create some fucking problems one day. But
Yeah.
thankfully, it's not intelligent, so we don't have to feel bad about it.
And okay, so this is the part of it too that I didn't even say, and I know we're going on AI too much, but it's just so much fun to shit on how stupid any of these arguments are. Okay, so we've already established that it would cost 10 to 100,000 times all the wealth that exists today. Wealth, not money, wealth,
Yeah.
everything. Like basically burn all of humanity to the ground 10,000 times to try to recreate evolution. And we're doing it with systems that not only are we just brute forcing, so we can't expect better than evolution, but we're using it on systems that are not even like a human. And so we expect to get intelligence like a human with a system that we're brute forcing that's not like a human, which is why I added, which is made this tweet somewhat popular, I think, which is why I added, we're never going to get AGI until we add a fully functioning penis to ChatGPT.
Oh, then I can. Well, isn't that Jensen's dream to have AI breed AI?
Um, I mean, I think it's likely a necessity if we want to recreate human intelligence, and we're not going to actually reverse engineer it. We're just going to brute force it. I mean, the neural nets that we create have to have the same types of inputs,
What's the
and they
life
have to have
cycle for an LLM? Like how long until it reaches an age of maturity?
oh, when is it legal?
Well, I'm trying to figure out
I
like
don't know.
how often can an LLM spawn another LLM, creating a new generation of
Well,
LLMs.
you want to take the slave thing even farther too far. Maybe this whole AI push is not only just for people to create slaves that they're comfortable with, but it's for pedophiles to create lovers that they're comfortable with.
Ugh. Yeah, I've already seen like a lot of the. There was like a court. No, there was like a court
Uh,
thing where they caught some guy just making like tons of like AI kitty porn with what's that one called? It's not Dolly, it's the other one.
oh, Midjourney.
Midjourney, yeah. That's got some serious legal implications that we as a society probably need to address. Um,
Yeah, so and it gets even hairier too, right? Because this is kind of like, remember when uh, when it started becoming popular that Facebook actually had like legions of like third world people, slaves, employed to monitor all of the content that went into Facebook, is to the extent that they could, and you know, to kind of remove any blatant, nudity, child pornography, incest, rape, murder, all of this
yeah, yeah.
violence, and and everyone was just appalled that this is a thing. AI has the exact same thing happening as well. Uh, Somebody has to tag all of the inputs that go into an AI has to be tagged by a human in a specific way so that you can create the connections between things that you need to create in the neural net to get the outputs that you want. So, and it's also funny because you have Microsoft CEO saying things like, "We're going to bring AI training to India," to billions of dollars of AI training, billions of millions of people in India getting trained. And of course, they make it all sound wonderful and flashy, but my first gut instinct was, oh, they're going to train them to do metadata tagging, right? Because that's that's something that they don't want to have to pay much for, right? Because it's a pretty menial labor job. And it makes sense to move that out to other countries that have lower wages. Again, slaves. And those people have to look at all these images, right? I mean, this is part of my art back when I was experimenting with the human form with Bing Image Creator. Somebody had to sit there and tag all those pictures of
in order to stop you
and,
from making them.
No, at some point somebody took a bunch of pictures of probably just penises, right? Because part of the way to get around the fact that AIs can't do hands very well is to do more pictures of just hands and say, this is a hand. So somebody has to sit there and say, put hand on
hot
the picture.
dog, not hot dog.
Right.
Okay.
So somebody had to actually sit there and say, oh, this is a penis, and then feed that into the LLM.
Is that why all the penises that AI makes are extraordinarily large?
I think so. I actually spent probably a few days of my time trying to get it to make a little tiny bird penis. I used phrases like micro. I could not get it to make a small penis. They were all.
It's not programmed massive. With any small penises. It's programmed
right.
off porn.
So at some point, at some point, a human being had to sit down with a bunch of images of massive erect penises and put penis on it and feed it into the bot.
And those are the only penises ChatGPT knows. So it's really interesting. And they're all well above the average. I mean, he was making cats with human penises that were like 2-to-1 penis to body ratio.
I had like legions of clowns climbing monstrous like beans, Jack and the Giant Beanstalk penises.
Yeah, I remember that one.
Yeah. Only big. You make them as big as you want. You cannot make them small. And I think that says a lot about. So I hope people are starting to understand a little bit more of my art and why I was doing that and why I found such great passion out of that and why I got so fun.
Because you're like the kid from Superbad that just drew dicks on everything.
That's part of it. That's definitely part of it. Dicks are funny and weird. But the other part of it was LLMs are absurd.
Yeah. That's why it makes. I mean, if you like, there was a bunch of shit when ChatGPT first started like getting more mainstream, where like every piece of art it depicted was like hot white, like for women was like hot white women with fake boobs, right? And then like they've tried to like tone that down, like very intentionally, right? But it still will, like, the preponderance is for it to make like white people, giant dicks, fake tits, and hot anime faces. Right? And like it tells you a lot about who designed these large language models.
Yeah, because they have to tag the data to put into it, right?
Yeah.
Garbage
like they liked PS5 and anime porn.
I did that. Yeah, I had fun of that. I had a lot of AI folks who I wouldn't have normally interacted with on Twitter come together, and we were all at one point trying to make game controllers that didn't look like PlayStation 5 controllers or PS4 controllers, and it's very difficult to do.
Yeah, it's very hard. I tried it for like 10 minutes and I couldn't get it to output anything that wasn't just a PS5 controller or like PS5 controllers hidden. I asked it for like, can you make me something that looks like an NES controller? And it made me an NES controller, and then it put PS5 controllers on the table all around it.
Yeah, I guess
it couldn't help itself.
Yeah.
It's like, have you seen that one where it's like, make a room with no elephant in it, and it keeps putting elephants in the room?
Yeah. Yep.
True story. When I was 23, I was definitely employed doing cleanup work for social media image posting and saw a lot of inappropriate images that had to be frequently reported. That sounds like a terrible job. But yeah, I
Yeah,
mean,
I'm
if they're
glad.
making AI porn of Taylor Swift, right? Um, think of all the terrible things AI image generation is being used for. And it will
Uh,
continue to be used for those terrible things. It'll be
but
used
and but
for
I think it goes deeper than that because that places more of the blame on the people who use the AI and not the people who made the AI. But think about all of the terrible things that they're putting into the model to build it,
yeah.
to get that stuff out of it, right? I mean, some of it is collaging two things in existence that we don't normally like putting together that it can put together for you. But at some level, there is a significant, I think, it, responsibility for the people who are feeding this data in.
Should we
You
go
know,
far as far to say that AI would not be able to generate child pornography images if it hadn't ever been fed child pornography images?
I
Because
I
that's a
don't
big
know. I
statement.
don't know, and
We're
that
gonna get
bothers me. That
killed.
alone bothers me. I don't know
That
if
I'm now
that's being
disturbed.
fed in,
I don't like that. I don't like that at all. The
and
implication there
that's
is, huh?
yeah. I mean, when you start scraping the internet, I mean, at some point, I mean, so yes, I gave examples of, to get them to make better hands, you need somebody to sit there and write hand, right? They're also trying to do things to scrape the internet that requires less. You're going to get less accuracy for specific items, but you can still get, scenes or general relationships between images and a large set of words by just scraping the internet and associating the words around an image with an image. So it's not unrealistic to say that if this is occurring in a large enough situation, they are literally scraping and incorporating child pornography into their model.
Yeah, yeah. The same way they do big dicks, fake tits, and hot anime faces in PS5 controllers.
Yeah. So I mean, yeah, and I don't want this to. I mean, this is obviously a markets discussion, and I definitely I have fun talking about AI. I don't want to railroad it even more than we already have. All of this really to say that coming back to this data, um, the breadth is really bad. It's driven primarily by AI. I think that the technology is being extremely overhyped and misunderstood by everybody on what it can do, what it can't do, and all of the bad things that it is currently doing and all of the problems that are baked in. But from a market perspective, if it's all AI and everybody's really wrong,
Yeah,
uh,
yeah. That'd
once they realize that they're really wrong, what happens, right? So this is actually just looking this chart that you've had up for a while now. That's just taking that dispersion that you showed before and essentially just finding the moment arm of it, which is a fancy way of saying how spread out it is or how bad breadth is. Um, and you can see that since the banks failed at the end of March, it's pretty bad.
Should we talk about NYCB and real rates and the 10-year? I know a lot
Yeah,
of people are
sure.
starting to get bullish on NYCB.
Why?
Well, because they didn't die, right? So immediately
Yet.
upon something not dying, people become bullish on
Buy
it.
the dip. Yeah, you
Yeah.
got to buy the dip.
And
Okay.
so I think that yes, there's some CRE exposure with NYCB, but I also think they picked up a lot of bags from SVB and Signature
Yep.
Bank during that whole fiasco. Now, remember, this is a bank that has a significant portion of its total deposits uninsured. That means they either exceed the insurance amount, or well, mostly that they exceed the FDIC insured amount. And they have a significant amount of hold to maturity assets whose fair value at market, if realized, would lead to significant losses, right? Now they did survive this little CRE hiccup, and I'm sure at some level the Fed and Treasury probably stepped in to help them with some of that liquidity, but they remain exposed. And it's no coincidence that their failure came on the back of us seeing an increase in the 10-year. And so I know you understand the DD I wrote a few weeks ago or about a month ago, Jay Fresh, but
I
I
don't
think
read your DD. I
yeah,
thought
you
I
do.
made that clear. Yeah,
Anyway,
well, you're right.
but like it was a little bit more technical, and it kind of had to do with like how there's this critical kind of leverage ratio for these banks, and it's very centered around where the 10-year trades because of their the constant roll off and maturity. um, and there's a significant amount of risk presented to banks kind of at every level for the 10-year. In October of 2023, we just we just almost tapped 5% on the 10-year, and immediately upon that test the Treasury and Fed both fully reversed course in their not only the sale of securities, but in their plan for monetary policy for the year forward. And we got this massive market surge, and the 10-year pulled back, and banks were safe once again, which was the second time last year that uh, we saw actions from the Treasury and the Fed prop up prop up that 10-year rate and save banks from having to mark to market securities. I think as I said before, we're going to continue to see pressure on the 10-year, and this is something that this chart kind of points out as a little bit of historical precedence. Um, back in '09, '08, the dot-com bubble, more recently, in 2022 and 2023, we saw.
Now this is just for you get to. This is real rate, right? So this is
Yep.
the 10-year rate minus inflation.
Yes.
Okay.
Yes. And we saw some pretty significant moves in 2023 when USTs got downgraded. Um, Moody's is still kind of on the fence with downgrading those again. But we could, depending on Yellen's issuance and Congress's ability to get together and finally form a budget, we could see another move down, and I think that would be across the board at that point. That would be S&P, Moody's, and Fitch, if I'm not mistaken. Fitch was the one that happened late July. Moody's is the only one left who hasn't downgraded U.S. debt. If we see another downgrade, we could definitely see more banking risk exposed. But currently, the 10-year is sitting at 4.2 roughly. And as the rate of inflation drops, the real rate rises, right? So if the rate of inflation continues to decline and the 10-year stays high, we're going to see the real rate of the 10-year continue to push up. Um, and so that's kind of like part of why, at the beginning of this year, I was like, the soft landing isn't bullish. It's just different. It's kind of more of a rapid crash, because if we get the soft landing and we see inflation drop rapidly into the second half of this year, we're going to be dealing with a period of time where the real rate on the 10-year is quite high. And that can expose a lot of risk for banks. Um, so I kind of
Well, I
wanted
mean,
to.
so okay, so the other piece of that though is that the U.S. government is, like you mentioned with the budget, that they're definitely. I mean, if they pass a budget, I'll be shocked. But they're clearly still on a path of, you know, maintaining large deficits. I mean, the deficit is now, the deficit is larger than the nominal GDP growth. the growth of the deficit is larger than the nominal GDP growth of the country. And so it's going to be really hard if we're spending that much money and essentially injecting that in um, to get in GDP below 6%, right? Just because we're pumping that much growth into the country. And so you think about your real rate, right? If even if inflation goes down, uh, your U.S. 10-year, I mean, the fact that the GDP is consistently over 5%, and the 10 years not. I mean,
Yeah.
that's going to be it's going to be hard to drop those rates with the amount of growth that we have. And so if you think back to these banks who are sitting on all of these all of this underwater duration risk and rate risk, I don't think rates can come down at all
I
unless we get
agree.
a crash.
Yeah.
And so without a crash, rates are going to rise. Or without a recession. I mean, if the government passes a budget and lowers the growth rate of the deficit, say down to something like 2 or 3% of GDP,
Yeah, then we're gonna see
um,
NGDP contract, and
then
that'll
and
cause a
GDP
recession.
contracts.
Yeah,
Yeah, right. So
so it's just two
yeah,
paths to the
there's
same recession, right?
yeah, so yeah, not it's not looking great. Now in terms of this bank, I mean, yeah, a lot of their money's uninsured, but the FDIC has showed that they have no problem de facto, uh, insuring all deposits, right? I
Yeah.
mean, that's one of the reasons why all the banks didn't do as
Well,
hot as
they
they
can
could have
insure
in
all
this quarter.
deposits if the contagion is small, right? SVB might have
Sure.
been the largest bank failure since '08, but it was manageable. It was contained to SVB signature and what was it? Fuck, it begins with
Oh,
an F. First Republic.
something like that.
Yeah,
Yeah.
I think so. It was moderately contained. They got it under wraps. They're still holding a lot of that fucking those bad assets on their balance sheet, as you well know. They've been unable to get rid of them. And I think more that I want to point out that like NYCB almost failing, right, is just a continuation of this same issue from last year that has not been resolved in any meaningful way because we haven't had enough time for the constant maturity to roll over. We
Yeah.
still
Well,
need years.
yeah. So I think it's funny when people talk about the soft landing, but at the same time, they're all extremely worried about all of this risk that's still clearly there.
Yeah.
Um, I, I don't know that you could really intellectually, honestly say that there's a soft landing until we've, persisted for like 15 years to maybe even longer just to get all this long duration risk off of everybody's books. But I don't know.
But yeah, I mean, and to your point, yeah, I mean, yields are likely just to continue to climb, and as they do, they are going to, especially if they're climbing against falling inflation. We're going to see this real rate on the 10-year rise, and we're going to see more and more of that banking risk exposed. So long regional banks probably, I guess we could sum this up with long regional banks still very very risky, and especially as we approach the closure of the BTFP in March, because that will,
Yeah.
remember, BTFP very specifically allows them to gain access to liquidity at par value for those underwater securities, whereas the discount window does not. Now they're trying to encourage banks to get ready to use the discount window as BTFP shutters, but that will significantly impact the liquidity that these banks have moving forward from that point.
Yeah, and I guess another way to kind of state the same thing, maybe to make it clear to people, right now the Fed's really pegging short term rates, right? They're setting the overnight rate. Um, what happens even if they lower rates? Like, right, like everyone's really bullish because inflation's coming down, so they can lower rates, and everyone's going to get out, and we're going to be safe. We're going to avoid all this duration risk. But what's going to happen, right? They're going to lower the short-term rate, but the longer-term rates aren't going to go down for the reasons that we just described, right? The
Yeah.
economy is too hot. There's too much supply, and so the problem will still remain. Um, and if anything, right, you think about where all that money's going to go, it's probably not going to go into longer duration, seeking yields because there's too much, right? Why would you buy a 10-year if the government's going to keep spending at 7% of GDP? Deficits.
Why is
Will
nobody
go
talking about the fact that the Fed loses money? They lost like $118 billion last year.
because the Fed doesn't lose money; they create money, right? And then
Ah,
they create a negative number on their books that just gets to sit there forever.
this isn't an ad. This is me and JFresh talking. Rude.
Yeah, popcorn. It's really rude. So
So
yeah, I
yeah,
mean, I think the Fed can't really do anything about that, and I think all they're going to do when they lower rates is people are just going to take that money and put it into something else, right? So this is something that I wanted to mention earlier, but we just kind of glossed over it. I think that money markets going up is not a sign of how much money's on the sidelines, because first of all, that's a meaningless phrase, but it's showing you where people want to put their money, right? And so as the market goes up and money markets go, equity markets go up and money markets go up, that means people are selling, right? Taking money out of their more liquid places like their brokerage account and moving it into a money market fund, right?
yeah.
Uh, Less trading, more saving.
We're still seeing money markets grow. That hasn't
Right. So
that
I think
hasn't
that
stopped. Yeah.
I think that money markets growing isn't a sign that people are like ready to jump back into the market. I think people are already responding to the market going up and saying, I'm good with this, I'm getting out. I mean, you look at like people have been putting up on Twitter, the excess retirement rate, and it's of course spiked again now that there's all these people making all this money in the market. Um, yeah, okay, this is another thing of breadth, but yeah, so retire there's excess retirees of like 3 million people a year, like it just spiked, and so you think about like, okay, we're not growing our population at all. 3 million people in excess of what normally takes place is occurring. Even if we let all of the illegals in and let them all, take jobs and become members of society to grow our society, uh, like productive employee growth is now basically zero if that is maintained. And that what they're all doing is they're cashing out of the market. They're happy with that. They have no, this whole idea like if the market keeps going, people are gonna FOMO in. No, people are already cashing out. Like this is the
Yeah.
great cash out, and it going up is just gonna make that worse. And so if you look at what's going to happen when the Fed lowers rates, well, we know the long end, maybe it'll go down a little bit, right? There'll be a lot of volatility, but the long end will continue to go up. Uh, and people are going to probably if they're going to do anything with their money market funds, that's when they'll potentially go back into equities or go back into just spending, and inflation is going to go right back up. And so it maybe it'll cycle, but it's going to be a rough road, and cutting rates is not a solution. It's only a problem. Anyway,
The
that's
trend on
true
long
answer for
term
the day.
rates is bullish. Can
Those
can we
true answer
start
for the
can we
day.
start sending this picture to like all the TA bulls?
Yeah, or we could do what some people do. I kind of like it. They'll take a chart and they'll turn it upside down and change the colors
Ooh.
and say, "Would you short at this point?" or go long, right? But
Mm,
it's backwards, right? So
like
yeah,
that.
yeah. So
I
you
like the way
put
you're
that out there
thinking.
and be like, yeah. So put that out there and be like, tell my the chartists, would you go long here or short? I don't know, and don't label it.
All right. Actual Dan wants to know. Yeah, but seriously, puts or calls? I mean, I think we covered the call aspect of things. Things like we're gonna persist in this oversold options environment where things just kind of grind up for a bit.
No, you're good. Yeah, I mean, yeah, it's gonna be grindy. I don't know. Uh,
We may have a
Near the
pullback
money.
after expiration through OPEX. If we don't, I think this continues through March. And then that
Yeah,
pullback would have to be big enough to expose a serious chunk of short vol in order for us to keep pulling back. So yeah, I would.
I think the most likely thing is up this week. If we see downs in the next 2 weeks, we'll see some downs, maybe 150 bucks. And I think put sellers are just going to try to catch the knife, right? Why wouldn't they? They've won for so long. They're going to take that juicy ball and they're going to sell the fuck out of it. And yeah, we'll just keep going. So I think we're still definitely in buy the dip mode. But I think we're getting pretty close to blowing up. So it's definitely one of those cases where it's no longer easy to play this point. This is very
It's kind
tricky.
of interesting that we closed under trend on ES on Friday. Huh. I guess it doesn't matter that much, but a little bit interesting. Um, do we want to do predictions for SPX this week?
It feels, I mean, I don't know. It feels like this part feels like cheating without Dork here.
Well, Dork already gave me his. He wants
Oh, okay.
0% for the week.
Just flat.
Completely flat.
So he can do flat, but I can't do flat.
Well, he's never done flat before.
Okay.
So I guess we could give him
All right. I'm going
one.
to
And he's not
inverse
here.
Dork. I'm going to take Dork's projection and just flip it over.
So also flat?
No,
Oh, Bulgurk
I think,
won, by the way. It came really
I
close
know.
between me and Dork.
I was way off.
Yeah, well, I mean, so
I was kind of intentionally just trying to be
if
crazy.
you were, there was a point there, I think, where it could have failed instead of breaking up. But yeah, it didn't happen.
Yeah. Anyway, I think just like a roughly parabolic move well, hold on, we can be a little bit more scientific about this. So, what's that? I'm going to say just like a parabolic move into 5120 on Friday.
So, okay.
So slow and then fast. It can be rough. It doesn't have to be
Well,
sure. That looks good. Let's do that.
there you go.
That's me.
Okay. Interesting. So above Gamma Max.
Oh, above Gamma Max where it is now.
Oh, okay. So you're saying Gamma Max is gonna move up $40? Gamma Max has been flat as fuck for like 2 weeks. Um,
I'm looking at the SPXW Gamma Max, which has been going up.
that's true. But I don't know if we can we theoretically can we exceed
I don't
SPX
know.
Gamma Max?
I don't know.
Have we ever
We'll
seen
find out.
SPXW Gamma Max higher than SPX Gamma Max?
Uh, I'd have to plot it. I can't pull that up right off the top of my head.
All right. I don't think it's ever happened. Okay, here's Doric. He's just literally flat. 0% change. Oh, wait. Friday. Here we go. Boop. Alright. And then I'm going to say that I pretty much agree with you on the first half of this week, although I think more bullish
You
Monday,
always got to
Tuesday.
outbull me, man.
Well, just a little more bullish on those. And then that's Tuesday, Wednesday. I think we see a peak. Fail the 550. So I think something like that. And then
What's the rationale behind that?
CPI.
The expiration? Oh,
CPI and
CPI.
expiration. Yeah.
All right.
Actually,
SLD.
you know
That's
what?
cute.
I think I'll do it like this. There we go. And then I'll just say Bulgurk pretty much agrees with your take.
Okay, I'm gonna go ahead and say you don't get two. That's not
Yeah,
fair.
I'll let you have Bulgurk this week because you're already just super bionic. I can't get any more bullish than that.
You can't get any more bullish than hyperbolic.
Well, Bulgurk is my mortal enemy, so it's not that I get
Watched
two.
watched me end up still being a bear. Like it's just gonna go up even more.
Yeah, yeah. I could see that. I mean, we have the standard deviation like up here, right? Fucking 5200.
Mm,
But I think we oh shit. Where was this supposed to be? 20. There we
I
go.
think that's the 5120. Yeah.
All right. There we go. We got all three locked in. That's the quant dot plot. But yeah, I'm gonna be bullish first half of the week. We got a shitload of gamma falling off the chain into the back half of the week. Front half of the week looks pretty stable. I don't know how much room we have for the upside because that whole mechanic is still kind of weird, but I would say like 50 25 50 50 are going to be some pretty serious resistances. And we could fail those. I know we closed
No, we're
above.
gonna gap those after hours.
Yeah, right. I think that'll be the first thing that happens tomorrow. Unless, do we have any other data this week that matters?
I mean,
Um,
there's of course data matters, right? But I don't think there's gonna be anything that's gonna be so shocking that's gonna change. There's like retail.
I'm thinking like foreign stuff that'll hit yields harder. Um, Tonight there's not much. Tomorrow we have like nothing. We have consumer inflation expectations at 11. We got a couple auctions. What auctions do we have this week?
I don't know, but they can't be any worse than last week.
I don't think we have anything with duration this week at all.
It's been really funny because like the auctions this week were all great, like actually just phenomenal, and yet the rates still just slowly climbed.
Well, it was all foreign demand, right? So it just didn't fall on the prime lenders this time, or the prime dealers, right? It just like it was just gobbled up by foreign investors.
But it's funny the way that they bid so competitively when rates still just kept climbing like after the auctions. It's so weird. Like the
I mean,
auctions were so
anything's
strong.
anything's better than owning the yuan right now, right?
True. I guess if you're like, I want to make sure I get these, and I don't, the only important thing is that I own them. Yeah, I guess so.
What about Negadoric? He doesn't get a line. Um, so yeah, we have CPI Tuesday. When the fuck is PPI? PPI is Wednesday.
Nobody cares about that.
We got GDP out of EU for quarter second estimate for quarter four.
Other countries aren't real.
Yeah, well, EU matters.
Mm.
We
Does it?
have British GDP. Those all affect the dollar pretty heavily. Then if euro drops right on like reduced GDP or and they have like some regional recession problems at least, or the pound drops on GDP, both of those can push the dollar higher. So yeah, they matter a little bit. We have retail sales.
That will cause all of the value investors in tech right now to reevaluate their investments, I'm sure.
Absolutely not. Not even in the slightest. They don't. That's what blows my mind is like the dollar is at 104, and everyone's just like nonstop buying multinationals. But whatever. What are you gonna do? So yeah, we have retail sales next Thursday. Got some fucking regional Fed reports. Industrial production. And then next Friday is kind of big. Oh, next Friday is PPI. Oh, that's weird. PPI is like broken up. We have like month over month PPI on Wednesday.
All you're doing is making me think that I didn't go parabolic enough.
And then we have PPI Friday. Core PPI on Friday. Michigan consumer. Yeah. So
Don't even get me
not
started
too
on that.
crazy of a week, but CPI will be big. CPI could mark our direction for the week, honestly,
Yeah, up.
if it's hot. Well, yeah. I mean, right now the presumption is we're gonna lose a point on year over year core, and then year over year headline is gonna be flat. But if year over year headline is up and core is up, that would be kind
It's
of
just
rough.
volatility.
Yeah,
Just
I'll
volatility.
take a look at that tonight when I do the write up. But yeah, probably just volatility. But volatility is really kind of the enemy of our current price range, right? Like increased vol means that the sold puts start to
Yeah, but
edge the
vol's
market maker
always
lower.
the vol is realized to the upside, you see.
Spike and vol bad for markets, but I don't know if it would cause like an
Spike
early.
and vol bad for short calls.
All right.
I'm just being a dick.
525 has a nice ring to it. You guys buy whatever out of the money calls you want. I'll buy out the money debit spreads with $50 of range. I'm not that bullish. All right, and yeah, I think we covered some good bases and got some good information out there. So thanks for coming on, man.
Yeah,
Yeah,
always fun.
look at us
Next week we'll
floating
have
the whole boat without Doric. He's gonna be so
hopefully
jealous.
Dork I mean just I hope he just ruins his life already and just get a house. Doesn't even matter at this point.
You
Just get back in here.
might as well get married and have some children while he's at it.
Yeah. I've got a great chair recommendation
Get him some
that's
furniture.
fun for the whole family. All right,
All
I
right.
gotta go
All
figure out
right,
what we're
man.
doing for the Super Bowl.
Have a good one, man. Enjoy your Taylor
Yep, you
Swift
too.
concert.
Oh
Later.
yeah. All right, bye.
All right. Any questions before we wrap this up? Wind down. I noticed you typed that several times. So maybe a little bit towards the back half of this week or early next week, but I would say that's probably the soonest. When are you wrapping this up? Jesus, some of us want to enjoy what's left of the weekend. Yeah, I know you have tickets to the Taylor Swift concert. Go ahead. Don't miss it. Gaff. 10-year 3 month is a fortress. It is. All right, guys. Thank you so much. If you have any other questions and you didn't want to ask on stream or didn't get a chance to, I'll be around on my computer for the rest of the day. Pickles Picks will be out tonight. Probably later. I kind of want to see what futures do in the overnight session a little bit, but I'll try to get them done before 2 a.m. And then I'll see y'all tomorrow morning. Enjoy Taylor Swift. winning the Super Bowl. Or is she winning? I don't know who the teams are. It's Taylor Swift versus the Bears. What? Wait, who's in the Super Bowl? Red team? The Bears? Wait, really? Is it the Bears and the Chiefs? Oh, 49ers? They were my favorite team as a child because they had Jerry Rice. And Joe Montana. And then Steve Young. But mostly Jerry Rice. Okay, so if who's so if the 49ers win, market crash? When was the last time they won a Super Bowl? I can't believe you guys don't have any Super Bowl versus market statistics for me. Only in Japan. That's fine, right? Yen down. Taylor's KC. It's Taylor Swift versus the GOP. Well, we already know Trump has puts. What are your thoughts on what apartment to pick? The one with 2 months comped or a free e-bike? I think you just answered your own question. All right. Thank you guys so much. Everybody have a great night. See you later.